Why do index funds work so well?
Two reasons. One is it's always going to be the case that a very small number of stocks account for the majority of returns.
The less money we seem to have, the more risks we're willing to take. Can you explain that to me?
Daniel Kahneman said something along the lines of, when all your options are bad, your willingness to take a risk explodes because you got nothing else to lose. And I think you see this in a lot of areas in life. One that I see it all the time in, that is a big news story in the United States. I don't know if it's the same in Canada, but in America, we spend something like $100 billion a year on lottery tickets. $100 billion. It's massive that people spend on lottery tickets. And if you dig into who's buying it, it's almost exclusively poor people. They buy the vast majority of lottery tickets. And the poorer you are, the more lottery tickets you buy. And these are some people for whom they literally can't buy food, or they might be homeless. And when whatever little money they have, they go into a 7-Eleven and buy some scratcher tickets. And you might look at that and say, like, you idiots, like, what are you doing? This is the dumbest idea I've ever seen. And maybe that's the right answer. Like, maybe you could just stop there. But in Kahneman's framework, I think it starts to make a little bit more sense. If you have someone in a situation like this, who in their mind, at least, they think, I can't get a raise, I can't build a career, I can't get promoted, I'm kind of stuck in minimum wage job. If that's their mindset, then buying a lottery ticket might be the only time in their life where they can say to themselves and believe, like, this is my literally ticket out of here. This is the only chance that I have to get ahead. And so it starts to make a little bit more sense in that situation. And maybe you contrast that with someone who has a very high net worth. They might be like, look, I could just put all my money in treasuries and just live for the rest of my life just off the interest. And when you have so much, you don't need to take the risk.
Well, it comes down to perspective, right?
So basically that means if you have a brother who is rich and tall, you are more likely to also be rich than you are tall. It's more correlated than the literal DNA that you're sharing with each other. Look, is it a perfect correlation? No. Is it possible to be raised by a poor family and become rich? Of course. Is it possible to be raised by a rich family and end up in the streets? Of course. But there's a very strong correlation between those two. Not having FOMO is the single most important financial skill. I think it's so important that you cannot ever imagine accumulating significant wealth over your lifetime if you are susceptible to FOMO. Like, if there's literally one thing, like one trait that you want that's going to allow you to accumulate wealth, it's the lack of FOMO. Particularly in modern markets that can get so crazy with social media and Reddit and Twitter and everything. If you are susceptible to FOMO, there's no hope for you over time. I really don't think that's an exaggeration.